going on, everybody? Welcome back to Ladit Akera podcast. Today, I got with me one of my good friends, Malcolm. He's a full-time trader. He also has a professional job, and he's just gonna get in here on this podcast. We're gonna talk. We're gonna chop it up and see what are the old way of trading and the new way of trading and where he is now in this new phase of AI trading bots. And he's just gonna fill us in with a lot of things. Malcolm, welcome to the podcast, man.
Thanks, bro.
Yeah, so tell me, how long have you been trading for?
Uh, around what? We're getting close to 10 years now.
Ooh, over a decade.
Yeah.
Okay, okay. So what was the first platform you started with? Or who even introduced you into trading?
So I was in the military, in the Marine Corps. We went up, I had this thing I had to do called Corporal's Course. So
Okay,
basically, you meet a bunch of people who are trying to get to the next rank. Well, we already got to that rank, but you already got to the rank of corporal, but you had to go to that class to get to sergeant.
okay.
So while I was in there, it was this kid. He was probably, a rich kid or something like that, but his dad was a sergeant major.
Hmm.
So since his dad was a sergeant major, he told him about, trading stocks and all that stuff. So when he came up to me like, yeah, basically um, I got paid yesterday like $300. I'm like, how you get paid yesterday? We get paid on the first and the 15th. So I'm like, what are
Right.
you talking about? He's like, yeah, I made like $300 yesterday. So he told us about trading. He had Robinhood. So that's what I started with.
Oh, so,
Robinhood.
so the first platform you started was Robinhood.
Yeah.
Okay. So because I know there's difference between like say trading on an app like Robinhood, crypto, and there's plenty of other apps like that. But
Mhm.
when you started on that, what was the process of starting that? Like did you have some money from your paycheck coming from the military or you just started with demo accounts?
I mean, so since it was more like investing.
Hmm.
It just yeah, just took some money, put around like I had like $800 I put in there.
Yeah.
Um, and I ain't gonna lie, my first share that I remember buying was Tesla.
Oh, do you still have that
Yeah.
stock right now?
No, I'm a fucking idiot. Nah. Nah, 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 nah.
Over a decade
So
ago, you
yeah, yeah,
you would have been
I
living
messed up.
large.
Yeah, so I got it at 180, right?
Yeah.
It was around like 180. This is in like yeah, 2016. So
Okay.
um like that was when I first actually really started trading, like when I had my own account. So around 2016, um yeah, it was around 180. I bought like two shares of it, two
So,
four shares of it.
yeah.
And that shit went up to one, it went up to 220.
Hmm.
And like this how I know this how you know that I knew nothing about trading at the time. So I was like, it went up to 220. I was like, hey, there's no way it's gonna go higher than that. Like, you know
Right.
what I'm saying? Like that's an expensive stock.
It is. Yeah. Tesla was
I
a
mean, yeah, it
still not
was,
cheap.
but you don't know no better. So like
Right.
when
Right.
I said that, like, I was like, yeah, this is the highest it's gonna go. Um, Shortly after that, I sold. I made like, my little $80 profit. And
Yeah.
I was okay with that. Like I was okay with that initially until I realized like what really happened. So, I mean, to give you context to what happened at that time, Tesla went up from that price to
Hmm.
1600. Then they split four ways, went
Yeah.
back up to 1600. They
Yeah.
split another four ways, and then it went back to 800. And
Yeah.
then now it's doing all that nonsense that it's doing now. So if I would have only bought those two shares, um, I think that would have turned into, so I would have had eight, and then that eight would have got split four ways, 32. So I probably would have like 32 shares. Like, you get what I'm saying?
Yeah.
Like, and I probably would have made thousands off of just that one alone. But
Nah,
like I
you
said, when it went up to 220, I'm like,
so that's definitely speak of the inexperience of a
yeah,
trader. When you just
yeah,
see that your P&L, you're already in profit, and you're like, oh man, it's not gonna get any better or not, and then you boom, go ahead and and sell all of it, you go for your profit. I
yeah,
actually did the same thing during COVID. I bought shares in Walmart, I bought shares in Disney, and I bought a share in this pharmaceutical company. I can't remember what it was. But that's when I came back from overseas and I put some really good money in there. Within the year, Disney went up, and that's when all the Marvel's movies was coming out. They was ending phase 3, hitting the phase 4. So boom, shares went up. I didn't have an actual like say one share, but I had bits and pieces, points to a share. And then
Mm,
Walmart was pretty cheap. So I had like maybe five shares of Walmart in this pharmaceutical company, and they were sponsored by J&J. And then so a year later or 16 months later, I'm seeing literally my portfolio was nothing but green. Nothing
right.
but green. I go back a month, I'm still in the green. I go back 2 months, I went back an entire year, and then I see my portfolio chart, it was nothing but green. And then I'm like, listen, man, this is probably the best money that I have ever made. So let me go ahead and sell. Took all my money out, literally 6 months later, all them joints was up 3, 4, 5 points.
Right,
And that's
right.
when the vaccine was coming out, everybody trying to get it. And then you go to Walmart, you get that shot. So that was that connection right there. And then with Disney, when they fired the old CEO, the market plummeted, their market plummeted, market cap. And then when they got brought in the new old CEO, he
Mm.
literally once he started firing people and replacing people just to save money, Disney stocks boom shot up again. And that was me from not reading news. That was me from not following and researching the companies that I was invested in. All I did was
Mm.
like, oh, couple of hundreds, boom, let me go spend on that, and that's it. But then with more experience, I learned that hey, you just follow take the emotions out of it, but follow the company that you invest in every single day, learn the news that's coming about them, see the
Mm.
expectations and all of that. But now, I mean, now is a whole different game. So, do you do any type of options or trading Forex?
So Forex was that was the main vector for a while, like that I was doing the most. Options, so because I can't just do, I don't know, I wasn't able to jump into options and be like, I'm gonna just go ahead and do that.
Yeah,
So I haven't really been doing anything about that until I finish this book.
option, but till then price.
Yeah,
Nice.
yeah. So like this one, they showing you like all the different ways of like how you're gonna try to formulate your options, if you want to do like the saddles and all that, what does that mean? How
Yeah,
you can predict, how you can make money off of a trade, like what's, and then it goes into like, the fair pricing that they do for it, the simple model that they show you is the Black Scholes model.
yeah.
Um, they give you all like the math behind it. Like it's real heavy on the math. Because other than that, you just will be doing what everybody else,
Buy and sell.
does and just I mean, but it doesn't like at the end of the day, it doesn't is since this is derivative, it
Yeah.
doesn't I don't know, it moves weird, right? So
The
you can't
option
just
option
follow
definitely
you
does.
can't follow random people or whatever. You're gonna get whipsawed, back and forth, you know what I mean?
Yeah, yeah,
And that's why I'm trying to really learn like how it goes like fully before I
yeah.
actually really start doing it. But Forex was my main bread and butter because that's when I started to go from the investment side to like the actual trading side.
Like being a full-time. So did you take your money from investing and then becoming a day trader?
Yeah, that was essentially actually not quite. Nah, I'm gonna be honest. I started with uh like a proprietary firm.
Okay.
So I started with this company called Maverick.
Maverick. Okay, I heard of
Yeah.
Maverick.
Yeah, Maverick Trading. They like basically I put in 2,000, they
Hmm.
put in another 2,000, and I had an account. I had to try to make it work after that.
So it was match for
And
match. So there
yeah,
was
yeah, just up to that point though, up to 4,000,
so
up to that
two
2,000.
2000 was the max.
Yeah.
Okay,
If
gotcha.
I performed well in that, it would have went to a $10,000 account, and then after that, 20,000 up to 300,000.
Mhm. Okay, so it was one of those where if you put up like say 10,000, then you would have a pro live account.
If it worked more like this, if
Yeah,
if you gave them a desk fee, two
yeah.
hundred dollars a month, right? They will provide you the capital. If you when you give them the $200 though, they will evaluate how good your trading was, and then they'll
Hmm.
bump you up to another tier.
Okay.
You always pay the desk fee, $200. and it's a 70-30 split.
70-30.
So 70-30 profit split your way.
Your way. Okay.
Yeah.
And so what was the account size that they give you when you was trading on?
I started off I had the 2000 and I didn't make it.
Mhm.
Uh because once again, so now you go from having the inexperience of investing and then you have the inexperience of then trading.
Right.
So
So,
like at that time I'm watching like, I'm watching the markets like 9 hours a day,
I
you
mean,
know, everybody does that, right?
yeah.
You think that's like your best way of making money. And then I was watching by the tick though. See, because I didn't have a
Mm.
mentor or nothing like that. So I'm thinking like every change in the market like means something.
Yeah.
You know what I'm saying? It probably took me a year to realize that, oh yeah, it's like noise.
Right.
It just happens.
What you're saying is correct. Two things can be correct because also a lot of it when the markets when the wicks and the candles are going, some of them don't mean nothing, but they still do mean something. It's like when
Yeah,
the market is closed overnight and you just getting those small you literally getting those small candles forming. You don't know if they're forming if it's in volatility or they forming for a retest, waiting for the
yeah,
market to shoot up, or like say if you following a US based market, but then it's moving into London or Tokyo session, and you're over here like, nah, that don't mean nothing. But then you can actually analyze your market if you go to a different pair, like say
right.
London or Tokyo, then that market is moving up based on what's happening on yours.
But you see how you like you're saying that it's context,
Yeah.
right? Which determines if it means something or not. I didn't even have that. So like
Mm,
we talking about like I'm looking at this not like a price point like a significant level or nothing. We talking
right.
about when I started looking at it,
Yeah.
it was 1.4906663, and when it went to 664, I'm like, oh, that's
Right.
going up. You know what I mean? Like that's going
Oh,
up. Like that, yeah, like that. Like stupid stuff like
man,
that.
I
So
get
that's
you.
I would do that for 9 hours a day. Like you get what I'm saying? Because
Wow, wow,
because
wow.
like I had nobody else to
Nah,
really
trust
like.
me. I feel you. I definitely
Well,
understand.
that was dumb. That was dumb. Now I look back at it, like that was pretty dumb. But like it was just it I didn't have a way to do it.
Right.
I didn't know anybody else doing it. And then I'm watching certain people on YouTube. That's where like
Mhm.
I fucked up at a little bit too, is watching these people on YouTube.
Yeah, because
And
a
they
lot
they
of people
don't.
flex on demos account that's not even
Right. Well, but then they follow it up with they start renting stuff. Like they got Lamborghinis that they don't rent it and all this other stuff. Or the money that they are making is from, people buying their courses and stuff. Because I
right.
think I was doing this like in the like the beginning of all this.
Right. When the Forex market was still here and then everybody
Yeah, or
in the
even then
course.
like people like those trading influencers, they just started becoming a thing.
Right.
You know what
Yeah.
I'm saying? Like the ones, oh yeah, I woke up, I probably worked like 3 hours a day. I made like 30,000,
Right.
you
Right.
know. So I'm falling victim to that stuff too. Like all of that, where it's like there's nobody to tell me, hey, watch out for this. Or like it's not too many people that got burnt yet, where it's like it's common knowledge.
Right,
So
exactly. So it was probably in the phase where people like say, hey, come in, we'll teach you this. They're not going to tell you that you will lose money. They just tell you keep on dumping money in here and
yeah.
eventually you will get to our success to where our platform is so huge. And because I think it's also materials what people see.
Mm,
People forget because I fell into that as well to where it's like, hey, I can get to that point where you see somebody renting a luxury car, like renting a fast car, or living in a very high story building, right? But then they never tell you all, like the books you just pulled out, they never tell you literally this terminology that you have to learn from
right.
beginning from what's in an hour to go to 4 hour, to go to a
Yeah.
day, to go to a week, or then you go before you enter the market and look at the small time frames. You go from 5, you go to 30 if you want. Some people look at even 15, some people even go about a minute. So you forget all of that, which that take years of perfecting
Right.
before you can even make $1, before you make $100, before you make how much whatsoever. And I think both of us fell into that. But then So from all, I know it's such a long pivot, but from there to where you are now, what type of trader are you right now?
I'm more of a swing trader. So, like with you being a professional, right?
Hmm.
I got a hard career in general already. So like
Yeah.
it's right now I'm a technician, right?
Okay.
But I'm also a programmer,
Hmm.
right? I went to school to learn programming so I could be a better trader because
Yeah.
that's why I saw it. So
Yeah.
basically, I'm moving as of right now. I'm a swing trader, but I'm trying to have some of my strategies take a more automated approach
Okay.
and take a lot of testing, a lot of bad ideas and stuff like that, and just getting the infrastructure down first to even do it. That's in fact that's the hardest part is me being able to write the code to be able to do that. Um, and the type of system I'm trying to have is one that takes care of your trading, obviously, like execute stuff while you're there. Take the emotions out, right? It'll
Yeah.
do what you do. If you were there, it's just that you're not there.
Right.
On top of that, it'll measure how well it's working, how well the strategy is working, and it's document the trades as you go. All of that. I'm working on all of that
So do you have a beta
for a
version or
trading
are you
system.
still coding?
Yeah, I'm still coding it for the most part. So as of right now, like you got to figure out like what are you going to do as far as testing. So let's say like one of the strategies that I got, right, it's a news event strategy. I paid the guy some money to learn this. Actually, I guess since it's his thing, I'm not gonna like disclose exactly how it works,
Yeah.
but basically it's you want to look back at some news events. um so you'll go on like FX Factory,
Yeah. So let's say
right?
it's CPI news. Let me
Say
just,
so say actually that was exactly one of the ones that I coded up to.
okay. See.
So actually, yeah. So basically, what you would do is I would go back to the last 8 times
Okay.
the CPI came out, right?
Yeah.
I know, and how would I do that? So the data on like the CPI when it gets released and everything is on the Fed database, the Federal Reserve
Yeah.
database.
It's got you.
Uh, yeah, so it's the Fed's one. That's their report. It's got weird days when it comes out though, right? Like
Yeah.
it's like the second
I think
Tuesday.
last one was I think not February. It was March. I mean, yeah, March 12th or something like that.
March 12th or
Yeah,
something.
that was the last one. I can while you talking, I can actually pull it up right now on
Yeah.
FX. Yeah.
So I would go on the Fred, right?
Yeah.
To look. So once I find a news event that's got a red folder on FX Factory,
Yeah.
I'll go back at the last 8 times that it happened.
Right.
Any pair that's associated with that news event, we talking about the CPI, then I'm
Hmm.
talking about, USD pairs, any type of crossing or whatever. And I'll go back and measure per currency cross or whatever.
Yeah.
How did it move in the next hour um after the news event came out?
After the news. Okay.
Right? Yeah. After the news event came out, because that's when you're gonna get the most. That's when you get the most movement.
Exactly.
So
That's how
once,
volatile the market going to be right after that.
right, it's gonna be crazy volatile. Now the problem is, you trading around a news event, you probably have a little bit of slippage, right?
Definitely.
Maybe, not crazy though, because you're trying to look at you probably have a slippage of around like, especially now they're kind of efficient. You probably get like 5 pips, like
Right.
maybe 5 pips off or whatever. That's not horrible. If if I'm betting on the CPI moving, USD yen, right?
Hmm.
100 pips. Okay. Usually it's been one directional, right? If it's one directional, then that means I don't even care. I'm not going to pick which side it's going to take.
Yeah.
I'm just going to make a buffer and let it make its move. Once it makes its move, I'm trying to capture whatever the buffer I put. I'm trying to capture from outside of that to the high, basically. So I'm trying to get around like if it's 100 pip move, and I'm probably going to get like 60 pips, like safely, right?
Okay.
And then after that, I'm out in the next hour. So the best way of doing that though, how can you tell it moves, 100 or whatever pips in that pair? You gotta go back and test it. So I used to do that by hand. I would just go back, do the math,
Oh, you
look
was doing
back
the
eight
math
times.
by hand.
Yeah, by hand. Just go back and do it. Because I didn't understand the computer could do that. Right. They could do that for me. So now what happens is I'll go get the date from the Fed, right? Well, the
Mhm.
computer does this. I'll go get the dates from the Fed, look at the last 8 times. So I got, exactly when it happened, the time and the date. Then I get to look back at the last eight. I can get the average. I can get the um uh basically like if it was one directional or not for the most part.
Yeah.
I basically I can capture all of the variables that I need to determine how I'm going to trade it the next time.
Okay.
Right.
That's actually, yeah, that's actually quite good. That because
Yeah.
for you are going beyond technical because all you're doing is because when the feds come out with their report is literally they have the projection because right now I think it's a 2 point something. It was
Yeah.
literally it's either it would stay at a 2.1 or go to a
Mm.
2.2. But that 1 point that is huge in the market because a lot of time if you're not ready like you said, you already know what happened in the previous eight. Like, just saying previous eight, the interest rate from the Feds was so high, now it just keep on decreasing, decreasing. And the last one was March 12th. That was
Mm.
February CPI.
Right.
And it didn't move that much. It stayed the same. The rate, the Feds did not want to cut it or raise it.
Gotcha.
But that's actually very interesting. But does that mean that you only going to be trading news, or are you also going to be in the market for technical analysis, to trade every single morning in a US market to see, 9 o'clock, 9:30 when the market open, or before or after that? Or you just wanting to have the best technical analysis on huge news, CPI, FOMC, and stuff like that.
So realistically, what I'm trying to do, right,
Yeah.
is find repeatability.
Okay.
So while I started off with a news event because a news event is going to repeat, right?
Always. Yeah.
Nonetheless, you don't really have to do that much research as to when it's going to happen.
Yeah.
It's already on schedule. So
Exactly.
that's what made it an easy target to go after first. Now, when we talk about repeatability, that
Yeah.
could be anything as long as you have enough sample sizes to determine, to be able to learn from it. So yeah, I'm going past technical analysis
Hmm.
to me doing like more like statistics.
Okay.
It's kind of like how everybody, how everybody does with like the gambling and stuff like that, right? You
Right.
got all these independent events that happen, but you look at previous things that they've done and then you try to project that on the future stuff. I'm doing that when I'm getting the statistics of how they performed before to
Oh,
see the
yeah.
next time a similar market condition happens, uh, what will happen with that,
Yeah.
right? What am I expecting to see and how can I trade it? So one of the things, I mean, it's many things that you can do test. Like one of the things I recently tested was like if the market closes at certain point on a Friday, what does that mean on a Monday? Like does it
Yeah.
mean it goes higher normally? Does it go lower? Is there some type of pattern there? Right? Because
Yeah.
that's repeatability.
Exactly. It is. And that's also the tricky thing just this past weekend. Sunday, I mean not Sunday, Friday, the market closed up in a bull. And then over the weekend, President Trump was telling everybody to tell everybody to go buy Tesla stocks, right?
Yeah,
And then something that I already knew that, like you said, the market just repeats itself on news or whenever it hits support or resistance threshold, you just go back and look and it can repeat itself. The market literally, if you go back to TradingView or wherever, the market literally shot up because of what President Trump said,
right.
because the stock market literally relies on the president. Is the president predictable or not? Like President Trump is unpredictable.
Yeah, you're not
So
gonna be able to get nothing.
So the fact that he said that, hey, everybody go buy Tesla, that shit
Yeah,
was funny. And then literally Sunday, 6 p.m. market open, pre-market. So I don't want to confuse people, but pre-market, boom, literally US 30, S&P, NASDAQ, all just shot up. And even until today, the market has continued trying to get back to the threshold of the past, what, 6 weeks where the market was just plummeting like crazy.
yeah.
That was insane. So for me, I'm more of a trader. Then I take my money and then I invest it in the long term because I know the long term is the big win. Day trading, you can make, like you said, 3,000 today, but then you can also lose 3,000.
Yeah, you're gonna lose tomorrow, which
Exactly.
happened
So for me,
thousand times.
I want to make money quick way, but then make it the long way. I mean, invest it in the long term. How is your way of making money short and long?
So I mean, same thing. You just go through. So I mean, I call them two different battles, right?
Yeah,
You got investment one, and then you got the trading one. So I do the investment one. I do it a little differently. I'm not going to have a program to execute that for me, right? Because I don't need the speed, right?
right.
So I just do that on Excel, right? I'm
Okay.
looking at market cap and all that stuff, price to earnings ratio, looking at that debt to income, and all that other stuff. I'm evaluating it just like you would another business when it comes to investment,
Yeah.
right? Also investments if I feel like being lazy, but I want to park my money somewhere. Um, I will, do a index fund or some type of index fund that I trust or whatever, right? You can't go wrong with like, your VIX, your what else? You got the VIX, you got Vanguard, you got
Vanguard,
Fidelity ones. Like,
QQQ, and
yeah, they're all,
those.
they're all viable options.
Yep.
But yeah, that's different. So I definitely you always supposed to plan for the long game anyway,
Of course,
right?
always. Yeah.
So you always parking some money over there.
Right.
But for me, like I said, I'm not much of a day trader anymore
Yeah.
because for me, like my psychology, I'm a overtrade, right?
Mm.
Like I'm going to. If I sit there in front of the monitor all day and I gotta click this button, I'm gonna click the button. You know what I'm saying? Like it's not like it's not a
I feel you.
yeah. It's some
So
days I
okay,
have some
so
bad days.
I like that right there where we at. So in the next segment, we're gonna start from over trading because I'm pretty sure you got some great stories, same as me. Yeah, in the last previous segment, you brought up over trading due to psychology. Now, do you think that or you just psychologically can't do it, or you see that you are in green, good profit, and you want to make more? Or is it that I'll just let you break down what goes to your mind when you think of over trading?
Um, so notice how you said, in the green, right?
Yeah.
And so you want to get more. I'll do it when I'm in the red too.
Ooh.
So it's
So
like
you want
even
to
when
get
you
out.
even when you slice it, man, like I'm going to sit there and press the buttons because that's just what it is. So like, I don't know if maybe it's like the ADHD or something like that. I have no idea. But like I'm not just gonna be able to sit there and like just not press the button. If
And
I
think.
especially like even if I have a trading like a plan, it's
Hmm.
hard for me to follow that. Yeah, I'm getting better with that though. Don't get me
Okay.
wrong.
Yeah.
But I fell victim to over trading a lot and I'm slowly crawling out of that and learning my lesson. So like I'll be honest, my one of my best days was actually using that news event strategy where I got 6 grand
Hmm.
in about like 30 or so minutes. And because I'm trying to get in and out within an hour.
Yeah.
So I feel like even though I made that profit, I overtraded with that too. Because
Mm.
I put it on multiple uh multiple trading pairs. You know what I'm saying? Like threw caution out the window, right? It's just like I think it's
So
going to be like this.
which pair did you make that 6 grand in?
So that was a CPI That was CPI news drop, and I did it on the biggest movers, like the biggest movers. If you're talking about like you know, anything with the pound,
Pound. Okay.
you probably don't get like a lot of movement. So I did USD pound,
Yep.
USD Japanese yen, and it was one more. It was one more.
Okay.
Um,
I get
probably
you.
probably Euro USD maybe.
Okay, got you.
Yeah,
So
but that was a mistake though. Like I said, like I overtraded.
so when
Um,
you got that 6 grand, did you go
mhm.
ahead and over leverage? Like say if you put up, let's say you put um 10 lot on 2 trades and then just hypothetically just throwing out the numbers without even thinking um 2 10 lot trades, then you make the 6 bands in less than an hour. So after that, did you say, you know what, I can make that back, so let me increase my lot size, or you just went into different markets?
Nope, didn't even do that. All right, so the way I trade is like I do a percentage base, right?
Okay.
Because forex won't allow you to do that. You ain't really got to trade in the lot size like futures and stuff like that.
Yeah.
That's the market that I'm going into now is futures.
Okay.
But yeah, forex you don't have to do that. So all I did was like I'd be like, okay, I got let's say I got 10 grand in my account or something like that, right?
Yeah.
Got 10 grand in my account. The most I want to risk on any trade is about 2%,
Facts.
right? So now I do like I'm gonna do the 2% thing, and I just saw like again, it's a news event type of thing. So
Yeah.
I set this up across three different pairs
Mm.
before I even knew it was going to be a hit or a miss or whatever. I just did it. I just did it. It wasn't a I made money and now I'm trying to make more money. It was like, oh, I'm feeling lucky today. The horrible idea. Like, you know what I'm saying? That's horrible. Like that's crazy. So, but like that was one of my biggest profits ever, and honestly, that was a failure of a trade, and I overtraded.
Mm.
So it's like okay, and then it's like so well maybe you could get away with that then,
Ev-
and I gave all that shit back in like a
Give,
week.
give it all the way back to the market.
Yeah, I gave yeah all of it was gone like a week. Yeah, back to break even. I'm actually pretty like my profits are very like just over my losses,
Yeah.
right? And that is due to my overtrading. That's why I started like at my like my benchmark. I'm
Hmm.
a, I'm a I'm like I'm not break even. I'm right above break even.
Okay, that's
Right. If I really practice, you know how I'm supposed to. If I practice what I'm writing down on paper as my trading plan,
yeah,
very profitable.
very profitable.
Very profitable.
I gotta say, yeah, one of the craziest ones. I think it wasn't gold. It was US 30. So
Mm,
I got into US 30, obviously 9 o'clock, make some moves. 9:15, 9:30, it would decide which way it wanna goes, right? So the market was on an uptrend the day before, dropped a couple of points, and then overnight it was retesting, right? But it never went over support. And I just took I just took a wild shot at it. I'm like, okay, this market's either gonna go up, gonna go down. That's obviously only two ways. But then I saw the space that it created, and I'm like, hey, this is where price action is. And if this price drop, it's gonna go and it's gonna go. I didn't expect it even to make that much. So I went ahead and put two lot, literally within 9:30, just kept on dropping. Boom, 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 boom. Dropped again, low push resistant, dropped again, little resistance. And then when the candle was about to close around 9:55, that joint just kept on dropping and dropping and dropping. The market closed like a clean, literally just like a ruler, a clean cut, nothing but red.
yeah.
I see my equity and my profit. I'm like, yo, this is really good. I exit out. I didn't even let it hit 10 o'clock. literally 958 and some or 959 and some change, I exited out, right? Market dropped again for the 10 o'clock. One thing I didn't do is I didn't go back into the past to see where it closed at previous weeks. I didn't go to the 4 hour or nothing like that. So the market dropped again, right? That was like 10 minutes in, and I'm like, let me get some more green. So I go
Right.
ahead, put in two lot again. Price dropped a little bit, market, boom, slid up on me. I didn't lose everything, but if I made 5K on that, literally on that 9 o'clock, by 10:15, I was only 1,000 in profit. Literally, I was so pissed at myself. And then when I went back and retested, because I already knew about retesting. Literally, I went back
Hmm.
and retested. I'm like, yo, if I would have had a resistant line, I would have noticed that, hey, at this price action, couple of candles way back, that's where price stopped. And at 10 o'clock, it just reversed back up. And then so that's one of my crazy stories of over trading and just the psychology of thinking like, yo, when you're in green and you are so much in green unexpected, just take it and leave it. And one of my
Hmm.
biggest problem is when it's very volatile, like after lunchtime, after 12, after 1, when the market is still pushing in a favorable direction, I will get in and then the market will slip again because it's preparing for tomorrow. Like all the big traders, the hedge funds, they made their money and they done for the day. That's one thing I had to learn is that, hey, even if you're $50 in profit from yesterday, take that and just prepare for the next day because nothing in this market is guaranteed. Literally
Yeah.
nothing. Nothing. I didn't see people that was 30 bands on Monday because the market is fresh. They did it again on Tuesday. And then by Friday, they in the negative zone. And people will be like, yo, what happened? It's like, yo, the market is not for anybody.
See, like, but so with me, I don't get, I don't have it that way where it's like because what type of trader are you for the most part then? Like are
Me?
you like day trader, you know,
Yeah, so day
go ahead.
trading and options. That's what I'm
Hmm.
at. I'm maybe in about 5 months into options. I know bits of it. I don't know it all. I'm still learning on how to do options because options move way faster than Forex.
Right,
So for me, I'm bringing my expertise from Forex, from support and resistance, price action. That's what I'm good at, and confluence and trading. That's what I use. So I just see where the market is, price action, support and resistance, go into the previous day, previous week, and then just see where price action is, and then from there, because right now US 30 and NAS 100. So that's what I'm on. Those are the two pairs that
yeah,
I've been trading this whole time. And I get in morning sessions, literally just from 8 until 11. Within that span of time, if I'm in the green by 10 o'clock, I'm good. If the market's still following by 11, I'm good on that. So for me, I'm supporting resistant and I'm trying to take that into options, but then options move very fast because now I'm learning in the micro and mini. At first, I didn't know the difference. I'm like, oh, that's just a different one. But then many move super fast, and if you don't have the equity, you can hit liquidation zone very quick if you just put one
right,
contract in. And then so now what I've learned is that you can go into micros. Literally for every one micro, it can be, I mean, for every 1 minute, it can be 10 micros. So you just play it safe there. And I learned that that's the safest way. If you're doing an eval, if you have a pro account, just whichever one that you like to trade on, whichever makes sense to you. And it's like if you want to do the long game or you want to do the fast game, and if you have enough equity. So I'm just taking my support and resistance and confluence of trading into options now. So I actually trade both of them simultaneously because when I'm trading Forex, I can put a small pip and I already know where the trend is going and I just let it ride and then split screen, put my options in. And then options, I'm literally say between 15 to 30 minutes and I want to be in and out. I don't do
So
all.
so you trading on what? Like what's the granularity? Like what time frame are you looking at? Like candles when you making your decisions?
So entry points, I'll entry points, the lowest I will go is 5 minutes. That's after I already marked all my highs and lows from the 1 hour and the 4 hour candle. And then from
Hmm.
there, I look for the entry point between 9 o'clock and 9:30.
Hmm.
So whatever candle start at 9 o'clock, that's not the trend is gonna continue. So if the market is going up and if you're seeing it that we on a downtrend, on a bearish trend, it might just reverse on you. So I usually wait between that 9:15 and 9:30, make my decision. Because I mean now I'm good at it to where I know where the market is gonna go, and then
Yeah,
I'll put a safe trade. But then sometimes also I will go ahead and be like, hey, I know where it's going. Let me go ahead put a 5 lot on a USD versus GP when I used to trade that. But then now with US 30, it's like, okay, for my account size, I will go ahead and put a 1 lot, a 2 lot, and then just let it flow with it. 5 minute entry point, get in there, 2, 3 points, see what it is, calculate that. Am I good on that? How much percentage is that? Okay, boom. Today we made maybe 5%, close to 8% of what our account is. Get out and be done with it. And then for the options is literally 30 minutes because I like the 30 minutes on the options because options follows wherever it goes. So if it's on a downtrend, it will continue that downtrend. You enter the market, get your contract size within 30 minutes. You either good or you either bad, and then boom, you get out. But support and resistance, entry 5 minutes, and literally analyzing on the hour and the 4 hours.
gotcha. So like yeah, it's a little bit different from like how I trade
Yeah,
in general. Because you gotta like all right. So for me, I like the idea of because how you saying the long game, right?
yeah,
So swing trading seems like the best medium between the two,
okay.
meaning that I can have a trend and play it out like a long game,
Mm-hmm.
okay, and scale into it as it's moving in my favor and not have to be there like I would for day trading,
Right, correct.
right?
You can leave it on.
Because you focus like you gotta think too, like I got a job. So like
Right,
and
right.
also I got a very hard profession too, being computer science and software engineering.
Mm-hmm.
And like I can't be there all the time for it. And I would hate to like have to miss an entire day of trading if that's like my thing.
Yeah,
Um, but you saying you gotta, the markets open up at 9. So like, but that's I've already been at work probably for like 2 hours at that point,
yeah.
and I might have missed something. So the way I started trading was more conducive to that. And also, like I said, you can find like trends and find context where it would make sense to add to a trade to or anything like that. But mostly, like I said, because I overtrade too, and I tend to trade. I mean, I don't know if it's me or not, but I always trade when the market is just not moving. Right. It's gotta be like I said, it's gotta be like the ADHD where I'm thinking it's going somewhere, but it's not. And it only took journaling to reveal that to me. Once I started doing journaling, I'm like, that's when I realized I was like, yo, all right. However profitable I think I am, I'm I leave so much on the table
Mm-hmm.
because of the hyperactivity, right? So I look back at a lot of my trades where I made my 200, $300,
Mm-hmm.
and I was like, yeah, that was a trade. I made some money, boy. I'm green.
Mm-hmm.
Yeah. And I look back, I was like, yo, that was the beginning of a of a trend right
of
there.
a trend that
Right.
trending.
That you was trading when it wasn't really moving, you know what I'm saying? There was that one day where it took off and got you your $200. You got your $200 and you got out. That
Yeah,
was a $3,000 move.
that
And
was
I've seen that like a bunch of times when you go back and actually like trade, because the way I was the what when you go back and journal, because the way I was journaling was very meticulous too, which is also why I decided I need to start getting a like making a program for this.
okay. Of
Because like, all right, so before I explain how I do journaling, like you do journaling, right?
course, yeah.
So how do you do it?
Okay, so let's say yesterday was I just did one over the weekend where
Mm,
pull out trading view. I went on a week. I went the previous week. So I went from last, not this Sunday, but the Sunday before, all the way to last Friday, right? That's my journaling, not day to day, where I just write down my trade entry and exit. No, I'm talking about like the entire week. So when the entire week, where did the market open? Okay, last week the market opened high. So Sunday price action, let's just say as an example, it's open at 100. Okay, boom, open at 100. Then boom, throughout the week, how many hours is retest? Now, obviously, it's a long before 6 until 9 in the morning. That's about maybe 10 to 12 hours, give and taken. Then at 9, I'll start journaling. Hey, price action is at 89. Last week, it was at 105, 1 or whatsoever. US 30. I write in advance 9:15, 9:30, 10 o'clock, 11, etc. till 12. Boom. What previous candles did I see? Did I see a shooting star? Did I see a doji? Was it a engulfing pattern? Whichever candle that was before the market opened, writing it down. For me, I'm also a creative person. You know, my background is in graphic design, UX. So I would literally draw out whatever candles help me visualize my trades and entry better. Boom. Then I let it play out until whatever I exit. So if I exit at 10, I'm writing every single thing what happened at 10. How many points did I get? What the percentage that I got? When did I entry? What was my emotions like? Because sometimes, even for me, some days I'm hyper to where I'm like, come on, hit my points, hit my take profit. You hit my
right.
take profit, I'm out, boom. Or I'm out calm and I have confidence in the straight. Like emotions um varies on whichever trade. And then from there I go, boom, close my journal. I'm done for the day. So then I go from Sunday all the way to Friday of last week and I write everything down. I have some on my board and then I have like at least 5, 6 journals that's just literally full of trades, US 30 and NAS 100. And then from
Yeah.
there, like Saturdays are usually my back testing days, and that's the days where I go all over it. And then Sunday, if I'm not driving, I'm literally just going over the notes and getting ready for the market to open again. And I've seen a lot of it, like going back to what you said, where the market repeats itself. I seen it where it repeats itself, and that's when I got my confidence. Like, yo, I seen this happen last week. Let me watch it. I know where it's gonna go. Right there, boom. Put my buy limit, buy stop, and let it see where it goes. Boom, and follow it. Then that's why I go check mark 2 weeks ago. And this week, week two, the same thing happened, and the market either went bullish or bearish. So the notes I take is literally just Friday or Saturday, write everything down from my day to day, and then
Yeah.
I take it into trading view, start looking at it, go a week, go 4 hours, go to an
Mm,
hour, mark my highs, mark my lows, follow the trend. And then what I also do is, excuse me, on Trading View, I pull out the circle, one of the circle elements, put it on the 9 o'clock candle. And then from there, if I have a trend line, mark one, check, mark two, check, mark three. And then I know this is for the previous week. The market was here, and then we had a little bit of consolidation at a certain period, and that's when I know when to avoid it. So that's the way how I write
Yeah.
my journal. How about yours?
All right. So again, this is like the way I was paying another guy around like $200 a month as well. And he
Yeah.
was showing me this one of the first guys I guess I would consider like a mentor.
Hmm.
And he was saying like document every single trade. Like
Yeah.
when I'm well, but let me explain how you were saying do it. So you go in there, right? You got trading view or whatever. I'll go on trading view. Of course, you mark it up, do all that stuff, right? Everybody marks up their stuff.
Right.
Um, after you do that though, we had names for certain entries that we were doing. So we were looking at price swings,
Okay.
right? Price swings would be like, there's a level of consolidation where it does nothing. That's where I was at too. Like how I used to look at it was how you said earlier, it can either go up or down, right? And it going up and down is like, you know, that can determine if you're going to make money or not. But I realized it's a third, factor to it as well.
Okay.
If it's consolidation and when it does nothing,
Hmm.
right? That's what caused me to overtrade is when it does nothing. And I'm like, oh, I'm taking whatever movement, whatever
So you
noise.
was trading per candle per hour.
Like, wait, would you say that again?
Per candle per hour. So you know how when it's in consolidation zone, you can have a bullish candle and you have a bearish
Yeah,
candle, and then you
yeah.
have a like a doji candle that will come where you
Mm.
trading every single candle in that consolidation zone.
I wouldn't even nah, I would have a setup, right?
Yeah,
Where the setup is predicated on the fact that the price is going to move. That's how I'm gonna make my money. Because
yeah,
there's ways of making money in consolidation.
it is.
Right? You have a range or whatever. Once it hits the top of that range, then you're gonna reverse and then reverse and reverse and see if you can keep getting that for a while. If it's
Yeah,
if it's high noise, right? You're gonna have a nice average true range to be able to make some profit in between there.
facts.
Um, but if my trading is predicated not on getting that, but some type of actual movements, big swings,
Hmm.
when I'm sitting there for 2 days and it ain't go nowhere, right? It didn't go like when I did my journal, I'm looking back like, it was 2 days of me trying to make something out of nothing. It was just moving up and down. It was
Right.
consolidation though. That was never any real movement in there. So like I started taking, I started journaling that. And then I was go to look at, okay, how you were saying how you would draw the picture or whatever. I
Yeah,
would in trading view, you get to go and snap a picture.
yeah, you can
So
snap
I
the
would I would
entire.
go on, yeah, I would go on Trello on this thing called Trello. Basically, a lot of people use that for software management stuff like that. But I
Okay.
make like a little Trello board of like successful trades, failures of a trade and all this other stuff. And when I did that, you know, I would I would have entries like, okay, this is skinny leg. We call it a skinny leg, which is like once price gets out of a consolidation zone, you usually like shoot out of it.
Yeah.
So you do like a skinny leg. So I do a skinny leg entry or something like that. I'll name it. I'll say what I thought it was, where it started,
Hmm.
what type of other indicators that I saw. And then the next trade that I make, I would do it again and
Okay.
again and again and again and again. And that became way too much because it's like 10 minutes per trade. You know what I'm saying? Of journaling for me. So I started trying to find other ways of doing it. Like you could do it in Python, you can just get the numbers like the raw data from your brokerage or whatever and recreate a chart
Hmm.
based off of what you saw. So it'd be like, okay, look at what happened to price from this time to this time.
Yeah.
And then it'll just draw the candlesticks for you. So now I don't even have to even take the picture. It just goes back in time,
Right.
be
Go
like,
back.
I was in this trade from here to here. It recreates that for me, and then I get to make my trades from there. Okay, that's what I was seeing, right? I could see that this was this type of setup, and
Yeah.
since it was that type of setup, then I was expecting this to happen. And then you go from, okay, I was long or short, whatever. You get to put all that stuff on there where you land it. And when I started journaling that way, that's when I would look. I got the picture of what it looked like getting there,
Yeah.
but now, like I started looking at what happened afterwards. Like, oh,
Hmm.
was it a continuation of the trend that I started off with? Did it reverse? When did it reverse?
Yeah.
Or why didn't it reverse? What levels was there when it did that? So now I started to see like, oh, wait a minute, like Yeah, you got $300 on that, but that was $1,000 you could have had in the next 2 days because we got ourselves because a lot of times our trade, I'm telling you, is not moving, and it finally takes off,
Hmm.
and I got the first day of the move,
Mm.
not the six
Not
afterwards.
the six
You
after
know
that.
what I'm saying? So like that happened all the time.
So
Where yeah, go ahead.
I was saying, what was the longest that you held for a trade on a swing?
On a swing trade, I probably hold for like probably like I never really held a swing trade for over like 2 weeks.
Over 2 weeks. Okay.
Yeah, no. But like I'll find some good setups. And that's another problem I had too. I kind of call it over trading. A lot of people might not call that, but trading too many pairs.
Yeah, that's the thing.
Like,
When you trading too many pairs, you stretching yourself thin, and then on top of
mhm,
that, like, do you have the pro trading view?
yeah, of course.
Okay, so obviously you can see the multi screen for all the pairs, but at the same time, while you're trading, you still need to do some technical analysis of, like, say, why is the market pushing this way? Like,
Yeah.
is this one of those? Because there's certain times on US 30 where the market would shoot down. It'd just be a crazy bullish at 9 o'clock, but then at 10, 11, and 12, it's going up bull. And so if you have too many pairs, sometimes you can miss that because you're not going to pay attention to three, four different pairs. Like I even used
Right.
to do that. I used to go on my phone. I match the pairs. Okay, everything is USD JPY, USD CAT, USD euros, whatever. And then I would just boom, put a sell here, put a sell there, and then, like, literally I'm finding myself where I'm switching from chart to chart to chart to chart. And then if the market reverse, by that time it's too fucking late. You already
Yeah.
done lost money in so many pairs. Now you're trying to recover versus where if you put all that energy into one pair, all the money, technical analysis while your trade is on, then from there you can take and get whatever that you want out of that.
Well, also one thing we're not talking about too is like even the fundamentals or the macroeconomics. So that's
Yeah,
another part that I study as well, where it's like, you know, I had all 27 of those pairs, and I'm trying to look. So you gotta know about nine, the major nine uh countries or whatever.
yeah,
I gotta know the macroeconomics of all of those. Like, you know what I'm saying? Which don't make sense. So, I was learning everything like one of the biggest exports for Australia is gold. So
yeah.
Australia and gold might be linked together. And Australia and New Zealand, their market is very correlated. It's got a high level
They're
of
very
correlation
similar
in
that
there.
time zone.
And
Yep.
you know who else fit in there just for no reason at all? Japan.
Yeah.
Japan is very highly
USJPY.
correlated with all of those. Yeah,
Always,
but
always there.
they're correlated to the Australian dollar, New Zealand dollar. So it's like I had all of those things in there. Then I was looking at, what Europe was doing. So you got to look at all of Europe at that point, right? Because they all affected the euro. So the
Yeah,
euro is probably one of the
yeah.
hardest ones to develop some type of macroeconomic study on because it's such a all these different countries at this
Exactly.
point. And
Everybody is
then
the same on this on literally on the same pair or currency, but they
right,
all have their own different news and outcomes. Like just
exactly,
recently, when Germany, when they did a survey, and like I think it was 94, 98% of them say they're not gonna buy any Teslas,
right,
that might affect Germany market, but it's not gonna have anything if you're looking at JPB. That's ain't got nothing to do with it, but all still in the same pound,
yeah.
but then different markets, different countries, and if you don't know the both of them, you might think that, oh, hey, Tesla shares is plummeting in Europe, but it's not affecting the euros or the pound on the different pair.
Right.
And like you said, that's the microeconomics that you have to learn, and sometimes it would drive somebody crazy.
Well, definitely. I mean, that's where I was at. That's why you like, what I'm saying, you got all these different squawk boxes and all that stuff where they just yelling out all these different news events that happen.
Yeah.
Like, I did all that nonsense. Like I'm sitting there like, bro, this ain't it, man. This isn't it. So I started looking more like what the quants were doing, like the quantitative
Yeah.
people and stuff. So you got people like Jim Simons who just passed.
Hmm.
But making around like 36% every year
Yeah, which is
on
crazy number. Yeah.
on like with billionaires though. Like you already got billions and billions of dollars under management.
Yeah,
So if
to
you to be making $36 a year, like
that's
like that's
pretty
crazy.
lavish when it.
Yeah, but then you start to see that's when you start to look at different that's when you start to look at things a little bit differently though. Trying to figure out stuff with the computer. So like with Jim Simons, one of his strategies, which he was able to tell you because you can't even replicate it, right?
Yeah.
One of the strategies was to look at it was oil,
Hmm.
right? Seeing what crude oil was going to do
Oh
and
yeah.
how well it was going to trade that week or whatever. They would fly over they would fly satellites
Satellite and
over
body
yeah over
levels,
the yeah
body levels. That when I
right,
learned that, I was like, yo, they on a different status. They're
totally
not even
different
looking
level.
at trading view or nothing. They
No,
making calls when the satellite get them their data back.
yeah.
And when I learned, I'm like, yo, what kind of money these motherfuckers playing with? Cause
But before he got that type of money though, he was using statistics.
yeah,
So that's what I started to do. Because even with like statistics in general, like you can even do that with sports betting as well, which is why I'm making an application for that as
okay,
well, where you try to understand like, okay, this thing happens. If it happens again, what type of chance? Like, what am I expecting to see? And then now you build a strategy of making money with that.
yeah,
So that's where I'm trying to get to, where it's like there is no point in me doing just the technical and fundamentals. I also need to know the statistics behind it
right.
because that'll
Why
help me.
they're
That'll
making
tell me how I can do it. Like think about it like this, right? I can have a strategy that technically works 60% of the time, right?
yeah,
So people be like, in order for you to make money, it needs to work over 50% of the time, which
okay,
isn't true, which isn't true.
right.
But I can have a strategy that works 20% of the time, technically,
Hmm.
right? But statistically, I'm gonna make 7 times the amount of money than I would lose when I'm wrong,
When you're wrong, okay,
right? So with that being said, what is my expected value between the two?
yeah,
Right. So if my expected value is going to be somewhere between 3.0. So I'm gonna make like 3 times the amount of money,
right.
even if I lose 80% of the time. Right. So it's like that's why I started looking at statistics more and understanding like, okay, yes, this event is less likely to happen,
Yeah,
but what normally happens when that repeatable event occurs. And then you try to make some trades off of that.
try to replicate that. Okay, that
That's how he was trading though. He wasn't looking at, what I'm saying, like hey, he had some support and resistance stuff in there. We won't know what they had ever actually.
nah,
But
you definitely to get in
but
that
what
type
he
of
was
club.
yeah, yeah, yeah. Well, because the way the Renaissance technology works is we're working for ourselves, kind of sort of. We're managing our own money.
Exactly.
Right? And then some people can come in, but they got to be family. They got to be somebody that you know. We're all investing in this stuff to make our money. Like this is our money.
Right.
So we're not going to get their strategies, but some of the stuff that they did let out was statistics and computer science is what drove them to all that other stuff. And then they got to how can we take this even further? So they was having stuff like people looking at the lunar charts and stuff, right? Again, stuff that you can try out though.
Yeah.
Technically speaking, I could try it out. Hey, listen, it's a full moon, right?
Like a
If the
full
full
moon
moon
today.
happened on a Monday, then I'm expecting the market to be in a frenzy. And I'm gonna have a lot of money. So it's gonna move in a certain direction. You can
Right.
test that every single full moon.
Yeah.
You go ahead and look back. If it happened on a Monday, look at what happens. And then the next time is a full moon on a
Full
Monday,
moon on a
you'll
Monday
try to go off of that,
of that
right?
previous full moon Monday.
Yeah, because you tested it. Like, and then with the way they do it, they test it like 1,000 times, 1,000,000 times if they can. So
That's
now you get closer to the actual percentage,
yeah, because that's
right?
crazy because if you think about it, say if you tested that every single Monday, 12 months out of the year, a full moon every month, by by the fifth month, if you're successful and you see the trend, by the sixth and the seventh month, you can say like, yo, I can put a crazy. amount that I'm expecting when the news happen on that full moon, and it's gonna make me crazy money. It's either on a sell
Yeah.
or either on a buy. That's something I never thought of, but that's something I'm gonna definitely start learning about a little bit, and then just get another demo account and try to practice on that because that's a whole different strategy than just going on every day supporting resistance because I get tired sometimes too. Some days if I wake up 3 days in a row at 7 a.m. to literally just analyze the market and prepare for a good entry point on Thursday or Friday, I might oversleep because I'm already fucking tired from just getting up and I didn't make what I thought that I wanted to make. And then throughout
Mhm.
the rest of the day, it's like, all right, this market consolidation, I don't want to trade on a every single hour, going back at the 5 minutes chart just to see what I can break or make or not. But yo, Malcolm, this was great, man. I appreciate it, bro. We definitely gotta do it again because there's like some things that happen during news that I like to get more technical with you. Like for me, sometimes I will put an order in on a sell and a buy and wait on the news. Obviously, separate them from each other. And then when the news is being called, if it goes up, bullish, take my profit. If it goes down, bearish, I take my profit. And then I just put those buys and sells order in between. And maybe, you can teach me and put me on so I can even learn better to be a better,
Yeah.
trader. Anything else you got, man?
I'm about to say what just to that point, right?
Yeah.
Before I go. So you do OCO
Yeah.
when you do that? All right, cool. So yeah, that's how I do it too. That's how I set my buffer. But how do you know where to set your buffer at? Got to test that. And that's exactly how I do it.
Okay.
So again, you do the numbers and that's how we get more into like the algorithmic trading because it takes out the human factor into it.
The human
So
emotions.
yeah, we can talk about that, you know what I'm saying, coming up soon. And if yeah, I think we should probably get together really for some like some trading in general.